Okay, let's continue with our accounting for receivables. So far, we've clarified that there are two methods of recording bad debts, and that's the first one is a direct write-off, and the second one is allowance method. Now, in the case of the allowance method, which is the estimation basically, how do we identify how the amount that we need to estimate? How do we come to that estimated amount? And there are three methods that we can think of, and those are the income statement method. This is one. There is a balance sheet method, and there is a balance sheet aging for receivables method. These three methods will help us to estimate the amount to be accounted for as bad debt, or make an estimation of bad debt for our year, for our period. So let's go with the first example, which is the income statement method, which is basically you use the percentage of sales. Yeah, so you have, and specifically speaking, the credit sales. So you cannot really go with just sales, because inside the sales amount, you can also have cash sales. And since cash sales already have been received, you cannot make the estimations about cash sales, right? So you already have them. This is only concerning credit sales. Let's go with the example. Now let's look at this is our retailer company. At the end of the year, the credit sales have totaled to be 458,230. Now this retailer, again, I'm pointing out that this is a retailer company, Retailer makes an estimation that about 5% of its overall credit sales will result in bad debt. And now we can basically make that calculation of 458,230 multiplied by 5% is 20,911.5. Yeah, 0.5. So this is the amount that the accountant, the company makes an estimation that probably this will be a bad debt, and bad debt is going to be recorded as bad debt to debit and allowance for doubtful accounts credit, specifically the amount based on the income statement method. Now, let's assume that on April 8, it was determined that the customer, who is Robert, the name, Robert Kraft's account, was uncollectible in the amount of 5,000. And as we know it already, this is the write-off process. Yeah, we write it off. Not the direct write-off method, but this is the, so earlier, this is the estimation recording. This is the estimation recording, whereas in this case we have already identified, yeah, this is the identification. We have a specific amount of 5,000. We have even the name of the accountant, the name of account. So basically the customer who is not going to pay, or has been determined that he turned out to be uncollectible. We recorded as 5,000 to allowance for doubtful accounts, and account receivable is reduced, yeah, through the credit side, 5,000. And if the same account unexpectedly makes a partial payment on its loan, which is not the full amount but only 3,000, we will reverse part of it. Yeah, so this part will be reversed. Yeah, reverse it. Reverse entry, and then we will record the payment or remittance of cash of 3,000 only. Yeah, so this part you should already remember. Now let's move on to the second method, which is balance sheet method. This is percentage of accounts receivable, which we can see in the balance sheet. We don't see it on the income statement. We can see it only in the balance sheet. Financial statement. Here's our example. So this retailer, the year end, so accounts receivable on our balance sheet shows 324,850. We will assume that there was no balance in the allowance for doubtful accounts earlier from the prior period, so this is the zero balanced amount, and the company estimates 15% of its overall accounts receivable will be in bad debt. So again, we basically multiply 324,850,000 by 15%, which turns out to be 48,727.5, which is the amount of our bad debt. This is again the estimation entry. So earlier we assumed that there was a zero balance in our. So now we follow with an example where there was already a balance from the prior year that was $23,000 in the credit balance. So if we look at it in a T account shape, yeah. So if I look at it from the T account Yeah, so this is an allowance account, and it had 23,000 already from prior year. The balance, 23,000 on the credit side. Now, for the new year, we have estimated that our sort of allowance for doubtful accounts, or our estimation of bad debt, supposed to be 48,000. So let me change the color. So I'm not going to, so the balance is supposed to be 48,727.5. And so all I have to do is record the difference of that, so 48,727.5 minus 23,000, and that gives me 25,727.5, right? So that exactly is the amount that I'm going to write. So even though the estimation has been made to beat 48,727, it doesn't mean that we have to make an entry of that amount. We have to look at the balance in our allowance account. If it does have a zero balance, so the purpose is to have this ending balance to be 48,727, and therefore be careful not to make that mistake and record only the difference between the existing balance and the current estimation, which is 25,727. Okay, so moving on to the next estimation method, which is the balance sheet aging of receivables method, which estimates bad debt expense based on the same thing, the accounts receivable, except we have to consider the uncollectible time period for each account. So the longer the accounts receivable in terms of the age, the higher the percentage of the likelihood that it will turn out to be a bad debt. Yeah. So let's look at it in this example. So look at this. We have the again retailer's account receivable end of the year. The total balance is 324,850. The past due accounts are separated in categories of first from 0 to 30 days. The other one is 31 to 90 days, and then we have over 90 days period. Yeah. So it means that this first one is relatively new. It's only 30 days in their accounts. The $102,000 is in their accounts for over 30 days, but less than 90 days. And the last one is over 90 years of, in terms of the age in the accounts of this retailer. So according to that, they will provide this estimation. Yeah. So the younger it is, the lower the percentage of uncollectible, and therefore the total amounts will turn out like this. And again, if you look at the total of this amount, which is going to be 324,850, just like it is our total accounts receivable, then we will assign to each period percentage of uncollectible, and we're going to get our total by period, and then we will summarize it. We will get the total estimated uncollectible of 58,097, and then we will record it in the allowance for doubtful accounts. Here, the example gives you the fact that the allowance for doubtful accounts had a debit balance. Yeah, so again, let's look at it from the allowance account, T-account perspective. So the balance in this case, it was 20,000. So again, the same logic, because we need to have a credit balance, because why again? Because this is a contra asset account, and the balance is supposed to be, let me just go back, 5897. 5897 is supposed to be our balance, and the only way we can get to that balance is when we add to the credit side 78,097. Yeah, I hope this was very easy to understand. Yeah, so this is how it is basically using the difference methods. You can come to a different balance. Yeah, you can come to a different estimation amount for the period. Let's try an example of the balance sheet aging method. You're given this information disclosed right here in the table, which gives us the information about the accounts receivable total. Yeah, so let me just try to draw here as well. Yeah, so you're given this information which provides us with total for less than 30 days. The other one is for more than 30 but less than 90 days, and the last one is for over 90 days. Obviously we can also calculate the total later. Here's also the percentage of uncollectibles, 10%, 26 and 42 respectively, and we're supposed to find out the uncollectible bad debt, bad debt from this company, and as well as we have to record the year-end adjusting journal entry for this bad debt. So let's go with our calculation of bad debt first. So we have 39,540. Our percentage of uncollectible is 10%. Then 23,280 is our second between 30 to 90 days of uncollectible, accounts receivable, and 26% is assigned to be the percentage for the estimation. And the last one is 630 and 42% of estimation. Now we can just again use a simpler formula to do the calculation, and that will be what? 39 multiplied by 10%, and we can just follow up with the formula and find out the total bad debt for this period is going to be, with an auto sum, $16,151.4. That's our total. Yeah, let me just make it closer here. Yep, I could have done it earlier, but let's go with it. Yeah, so this is our total bad debt estimation for the period. Now, again, we have to, this is an allowance method. We are making the estimation now. Estimation is going to be recorded. The journal entry will be bad debt expense. On a debit side will be recorded 16,151.4, whereas on the credit side, we are going to record the allowance for doubtful accounts, 16,000. Sorry, I made a mistake, but I'll just fix it. Just a second. Give me a second. Yep. One. So this will be, let me just move this here. Yeah, so this will be our entry for our journal entry for the year-end adjusting process. I hope this was useful and you will be able to understand this example much better.